Good morning. All right, so I'm not going to waste too much of our time. I think someone was on the call. I think Pascal, but he left. So I like us to reach out to as many people that are on that Musha Moguls page. Let them know that the call it has started already. Okay. Um. So like we always do, would love to start every expo session with a welcoming address from one of our founders. But I'd love to say a few things before we start. And I'll be saying this along the way. Critical guidelines that I want to share with us to help us maximize the Musha experience today. Please ensure that you are very attentive. Don't be in a place where you are easily distracted, where you can miss out on certain things. Um, Attend this expo with a mindset, a ready to do, ready to take action mindset, because there will be benefits for that later on. Fortune favors the bold, right? Um, I want us to be as civilized as possible. I want us to be as free as possible with questions. If you have any questions that you want to ask that may come up before the question and answer session, just raise your hand. I want us to be as interactive as possible. This was organized for you and not for us. So it is necessary that we get to feel you on the call. All right. Um, Basically that's all I'll be saying for now. And if there's any other thing I'll be sharing with us throughout the expo, we'll be sharing links at certain junctions in the chat box. Please make sure that you make use of these links to do certain things like sign up, follow a page, and yada yada yada. So, without further ado, I'd like to bring up Mr. Chuka Okeke to take us for our welcoming address. Mr. Chuka, are you there with us, sir?
Yeah, I am. Good morning, everyone,
Good
and
morning.
thank you for the introduction, Daniel. So, just share my screen, and we can just give quick highlights of. I believe you can see my screen, right?
Yes, we can.
All right. So, welcome to yet another Musha Expo, the third one in the series and the second for the year. So moving ahead, just a brief intro to myself. I'm a civil engineer by profession, and has been in the real estate space for, I said 5 years, but it's been a little more longer than that. Um, I'm also involved in like different other businesses, and sit on the advisory board of about three other startups. And also, due to Musha, I started making content, and it's been going all right. Kind of like enjoying it so far. Um, like to start by saying, because I love this quote so much, we can't solve problems by using the same kind of thinking we used when we created them. So, like, our thinking pattern has to change. It has to be shift. It's to be a shift in the way we view things and the way we go about things generally. So, Musha, I just wanted to give a brief intro into Musha before we go ahead into our topic for the day. So, what was the problem Musha was trying to solve? Based on my experience in the real estate sector, it was kind of hard for developers, because I was once a developer, to sell properties easily, right? There were people who were interested, but they really didn't have the cash or the resources to venture into that space. There was also high inflation in the property space due to lack of credible valuations. People just come and slap on prices unbelievably, and just people still buy. Well, some people do buy, but it's so unrealistic when you actually do proper valuations and see the cost of the properties are being sold and what they actually meant to cost. And also the third major one was saturation. So there was kind of like no property marketplace that could cater to both large and small scale investors.
Mm.
So the solution was Musha, um, and I could say I like to call it the Binance of real estate because we've kind of like modeled the platform against the structure of Binance, the crypto company. So a brief intro to Musha would be a disruptive technology that is meant to alter the operations of the real estate sector. So we want to use this to help people assess real estate investments in real time and at a faster pace, where in turn we give the developers who own these properties easy access to funds to help them complete these properties because every developer wants to sell out, and that's what Musha is trying to do. And once you invest in these properties, you can easily monitor your investments on the platform. And we are also trying to solve that issue of valuations that are unrealistic by working in partnership with real estate valuators, credible real estate valuators, and helping them to generate and train our AI models to better understand the valuation of properties by location and also type. So today's topic is your first step into real estate. So I'd like to think of this like, well, if I was the one on the receiving end of this um, event, I think I would ask myself, what actually are the routes available? Because everybody knows if you want to enter into real estate, just go and buy properties. Just go and get any property you can afford, or buy land and keep, or buy land to build your own house. People are not really interested either way. But there are other routes that are currently being um, have been growing over time, and people need to know about these things, and people need to learn about them to be able to take advantage of it. And that is what we are trying to do with Musha. So today we'll have a panel who will be talking about this in more depth, and you can see the opportunities that abound around real estate. So what drives us at Musha? Like I said, my experience in the real estate sector was what actually drove me actually to work on this idea and talked about it with my friends, and they were also interested, and we built a team and started working on this. It has gone through so much iterations and um, also feedback from industry leaders and developers also in the sector, and they were really interested in the idea. And that would also show because since launch about a month or two ago, we've had a couple of companies joining us and publishing their properties on our platform. So we've got a wealth of experience when it comes to tech innovations and the real estate sector. So I'd like to leave us with this. When initially there was a video playing before the start of the event, and it was the guy was talking about how it would become second nature for people to invest and co-own properties with others, right? And this is something that will come and it will stay, because they gave also the Airbnb example. Because before Airbnb, people never wanted to allow strangers in their home. It's even unheard of, right? But
Mm,
with time,
yeah.
it became second nature, right? And same thing happened with Uber. You can't even imagine picking up someone you don't know on your car and just taking them somewhere you don't even know. Or maybe
Yeah.
someone entering a stranger's car, not like fearing that what if he like takes me to somewhere and just does away with me, or like something like that. So, but now people, it's a very big industry. Likewise, the Airbnb. So it's now common nature, and 2, 3, 5 years down the line, people will see the shift. It will be a very big shift, because with the inflation, there are so many properties right now that you can't even think of owning, or you can't even think of having access to. But with this, you can build equity with others and grow your real estate portfolio. And once this is done,
Mm,
you can then easily invest into maybe private ownerships and all of those things. But you have to start somewhere. You can't keep on waiting for the big checks, right?
yeah.
So imagine the possibility of co-owning properties across the world without having to worry about going to see them or meeting your co-owners. You just simply buy, monitor, and sell off at any point through one platform. It will be amazing for me, because I'm already starting to do that. So finally, if an opportunity doesn't um, knock, you have to actually build a bigger door. But we've gone ahead to do that for you, and we are asking you to jump on this and become part of something bigger, because the real estate, the crypto, I would say the crypto bubble, the crypto has come to stay. It's still growing, but there's so much up and down. And, like other industries have innovated, this would be a great thing that would come to stay very, very soon. And people would realize little too late that they had actually missed the boat, because by the time this gets bigger, you might be scrapping for like leftovers. And it's very nice to be an early adopter in any project, at least a promising one. That's all from me. Thank you.
All right. Thank you so much, Mr. Chuka. If there's one thing I took away from everything you've said, is that very soon, few years down the line, co-owning will become second nature. I mean, it will be a second nature to co-own, co-invest, and truly, brands like Airbnb and Uber have proved it. And I love the fact that those are the two examples you used, because they are not necessarily in the same industry. It means that this new wave and new trend of co-owning assets or co-owning spaces or co-owning in general is something that is pervasive across industries. So that's not one of the boats that you want to miss, right? So thank you so much, sir, for that. Thank you so much. All right. I want to use this opportunity to remind our attendees that there are cash prizes to be won, and these cash prizes are only available to those who have registered on the Expo meeting form. So a link will be sent. If you have not registered, please ensure you do so that you qualify for a cash prize. We're still expecting many more people to join us, but we'll be going and diving deeper into some other things. For now, I would like to play that video that Mr. Chuka mentioned. That's exact aspect of the video that he mentioned while we get ready for our panel discussion. So just stay with me on the call now. Um, so we're going to be diving right into the panel discussion, and for this, we have Mr. Nonso with us. We have Mr. Nonso in the house. Thank you for joining us, sir. Um, there's certain things that I would love to get into, like Mr. Chuka already introduced that our topic for this year's this month's expo is your first step into real estate. So we're kind of like looking at baby steps here, and I want to assume that people who are on this call are either in the stages where they've begun to make conscious efforts into investing in fractional real estate, or they're just exploring and then just a bit curious, right? But unlike the usual quotes, curiosity is will not harm you here. Curiosity is what's going to bring you into the certain sets of information that will help you excel in this field. So I'm not going to spend too much time. Can we have I will have our first question and then so I just are you with us, sir? So if you're speaking, we can't hear you. We can hear you well.
Is it Mr. Nancy you're asking for or me?
No, Mr. Nonso, Mr. Nonso.
Okay.
Hello, can you hear me now? Is it better?
I think I can hear you now. I can hear you now. Thank you very
Okay.
much.
Good morning, everyone.
Good morning. Good morning. All right. So my first question for you, um, okay, how does fractionalized real estate compare to traditional ownership in terms of affordability and accessibility? How does fractional real estate compare to traditional ownership in terms of affordability and accessibility?
Okay. Thank you very well. Thank you very much. Thank you for having me as a part of the panel. Yeah. So to answer your question, right? There has been this thing with real estate, right? Real estate being only affordable to the high class. You understand? So, real estate, it's a lucrative industry, right? That has a high returns. I the other day I had someone, right, who bought a piece of land in the 80s. Uh, he bought a piece of land for 250,000 naira, which was a big money then, right? Over the course of 40 years, 50 years down the line, the same plot of land was sold for, I think it was sold for 5 billion naira or something. Now, I don't think there is any business that will give you that sort of margin, right? By you not imputing anything into it. So that is to tell you how lucrative the real estate is. But real estate on its own, right? It has some sort of issues because it's not something you can venture into while starting from the scratch, right? It's something you have to venture into, right, with enough capital. So that reason alone, right, is sort of filters off the amount of people that can easily venture into real estate and make money from real estate. You understand? So where fractionalized real estate now gives a better edge, right, to the traditional real estate is the fact that with that 1 naira you have, with that 2 naira you have, right, you can still test the oils of real estate, right? You can still come in, buy a fractionalized real estate, right? A company like Musha manages the assets, right? And then you start earning funds while you are part of this platform. You understand? So with your 1 naira, with your 1,000, 2,000, 10,000, 20,000, right? You can make huge returns, and then you'll be able to build your portfolio into owning proper or owning full assets. You understand? Which Musha also offers. So we are now offering real estate not just to the low class, right? So it's just the low class can benefit from it, the high class can benefit from it. So I think that's actually the edge of a fractionalized real estate over traditional real estate. Thank you.
Oh, thank you so much. Thank you so much. So fractionalized real estate makes investing in real estate beginner friendly. It is very beginner friendly. Thank you so much. Um, I would like to direct this question to Mr. Francis. What would you say, sir, are the biggest misconceptions about fractional real estate, and how can we debunk them? Because I believe that misinformation is one of reasons why we have very slow adoption of these new investment strategies. You know, there's a lot of people have been scammed a lot. I mean, if you survive MMM, if anybody brings anything that looks like that to you now, is a lot of problem. So, what are the biggest misconceptions about fractional real estate, especially because real estate in Nigeria is a very funny space, right? And how can we debunk those misconceptions? So, this question is from Mr. Francis. Um, are you with us on the call, sir?
I think he's having network issues. But so let me
Okay,
step in and answer that.
okay.
So when it comes to the misconceptions around fractionalized real estate investments, it's all just like I said earlier in my opening presentation. It's just like it has to do with more like a stereotype stuff where people, due to experiences and biases built up over time, um, tend to see it in such a way that this is not viable, this cannot happen, this cannot work. And that is even in the aspect of co-ownership, how it doesn't even make sense. Uh, how can I own a plot of land with 10, 15 other people? And okay, who owns the land? How does it work? And how do I get my money? All those kind of, there are so many questions that people have asked, even me personally.
Mm,
But it's just through the power of technology, right? Because technology is advancing every day. You see a lot of things, a lot of buzz with the AI sector right now. And I would say there are so many things going on in the West that they have actually outgrown most of the things we are struggling with. And what we
mm,
need in Africa is kind of like a shift, a new a new thought process around what can actually be possible, because there's whole lot of technology around, so many things that can be done right now, but we still have a lot of physical problems in Africa, and one of it is the problem of you know um, availability of kind of like properties, homes to live in and all of that stuff. So when people have all of this, biases and stereotypes and everything, it's valid because, like you said, there's been a whole lot of issues in ownership, and even when you want to own small something with with your friend or something like that, there's still that kind of like trust issues, right? So right now with technology, I think in summary would be there is an opportunity for this to happen, and it can happen easily without anybody having any issues with their partners or like with anybody they are co-owning these properties with. Because number one, you
okay.
don't even really have to know them, and Musha is giving that trust, that second line of assurance that this is
Mm,
safe. You can go on
yeah.
easily. You won't have any issues with the other person that owns this property or asset with you. And coming to the part of investments, how is it safe? How do you know that these things, these assets, can I can get my money back from it, right? It all boils down to, I think I'll give a simple analogy. If you have all the money to buy a plot of land from a developer, you can easily go ahead and purchase that land. But if you were kind of like in a situation where you're doing land banking, your target is to own that land for a couple of years or something like that and resell it, right? And resell it to someone else physically. So
Yeah.
still very much the same with us in the sense that we partner with those developers, right? And you when you invest in these properties through those developers or through Musha holds those properties in trust for you. And whenever you want to resell, you can always resell on the Musha platform without having to experience any issues or haggles or any other thing, right? So whatever valuations that the land would physically have when you have purchased it as a whole, it still has the same valuations and it grows at the same rate of what it would grow if you had a full plot of land physical on site, right? So it's still very much the same thing, just that right now you are not having to cough out all of that money to buy a full parcel of land. You're just going to have
Mm,
a fraction of it. Yeah, that would be it.
okay. All right. Thank you so much. Thank you for clearing that up. Thank you so much for that. Okay. My next question goes to Mr. Nonso, and I want to ask because I'm also particularly curious. How does fractional ownership affect my tax obligations? Right? Because I know there's a level of tax obligations that come with property ownership, but now that I'm sharing it with probably like up to 50 other people, what does that mean? Does it mean that I get to pay less, I get to pay more? What are the implications of that?
I didn't get the question. Can you take it again?
Okay, I said, how does fractional real estate or fractional ownership of real estate affect my tax obligations as an investor? What effect does it have on the tax I pay to the government?
Okay, thank you for that. Uh, fractionalized real estate, right? I don't think it has. I don't think it has any tax obligation, right? Because it's just an investment, and with my knowledge about investment, right? Uh, you are not the one bearing the costs, right?
Okay,
Once, for instance, on our platform, once you come into the platform and then you purchase an asset, right? It's an asset. Now, we as a company, right, we would be the ones to pay some of the fees about the properties and then register with the relevant body, right? So it's part of
yeah,
our processing fee. Understand? So
okay,
you, as the owner, right, you are not permitted to pay any sort of tax, right? So the asset you have on the platform is not taxable. So it's just
okay,
Musha that covers that aspect of tax, right? And then we charge just a little fee, right? The fee is not just for the tax. The fee we charge is just for processing payment and other logistics, right? But
okay,
the assets you purchase on the platform is not taxable. You understand? So you have that security. You understand? And then Musha bears the risk for you. So, but I think Chuka will throw more lights to that.
okay.
All right.
Thank you.
Yeah. So with regards to taxation and the rest of it, you know, I think I've talked about this in our previous expos. Um, it's just like normal scenario where you purchase plots of land or any property from a developer or maybe a previous owner. Your tax obligations are just that if you are investing in such properties, right, there must be a way you can pay your personal income tax. And that model is still the same thing that applies to fractional ownership. So, for example, if I was a developer and I was developing some like an estate, and people come in to purchase those plots from me to build or do anything they want to do with it. Once they are purchasing or have purchased those plots, I, as a developer who owns the development company, my company pays taxes to the government and the appropriate agencies, right, that they're meant to pay to. So we are then hands off on whatever you do, because you could be a self-employed, maybe a doctor, or you work for a private organization, say maybe you're a banker, or the rest of it. So you pay your income tax with your salary in that organization. So if there are any other taxes accruing to you investing in properties, then you'd always be able to offset that on your own. And that still applies to fractional investments, right? So us as a company, Musha, as we are making sales and our company is generating revenue and all of that stuff, we pay our fair share of taxes to the government. And you as a property owner, you can then go ahead and settle off your taxes, the appropriate taxes you're meant to pay regarding any investments you've owned, because you might not be owning just investments in real estate, you might have investments in other sectors. So it's up to you to actually sort that out with the appropriate agencies. Thank you.
All right, thank you so much for that, for shedding more light on that, sir. I actually want to ask a follow-up question to um, Mr. Non. So we've gotten tax out of the way. We understand that, okay. We understand how tax works, but there are also certain things that we might want to consider. So I want to ask, what are the financial risks involved in fractionalized real estate? Are there risks involved? That's financial risks. And what would you advise, or how would you advise we navigate these risks? Um,
Hello, can you
Constance,
hear
are you
me?
there? Yeah, we can hear you now.
Okay, okay. Hold on, I'm trying to sort out an issue with my internet. Okay, yeah. So, okay, yeah. So, tell the question again, please.
All right, I was asking, I said, now that we understand how tax works, I wanted to follow up with asking if there are other financial risks rather, that are involved in fractionalized real estate, and how can we navigate them?
Okay, so yeah, there are a couple of risks, right, associated, financial risks associated to fractionalized real estate, and that is the reason why you, as a potential investor, right, you need to do your background studies well, right, because for most of the risk, right, if you participate or if you invest in a credible platform, right, most of these risks will be ruled out for you. You understand? Now we have management issues, right? We have market volatility, right? In the sense that because of maybe economic changes and issues, right? The prices may be volatile, right? And if you are not investing with a structured platform like Musha, right? You will get to a place where you can purchase an asset today and tomorrow they are telling you that okay, the asset I just purchased yesterday has fallen to this, and they don't give you any credible reason as to why there is a decline in the assets. You understand? So, but in Musha, for every price adjustment, we have a price chart. You understand, on the platform that shows you okay, this went up at this point, this went down at this point, and then you get to also see the reasons for that. So you stand chances, right, of being scammed, right? Because it's fractionalized. You understand? Most of these people, uh, they don't give you like they don't show you documents, right? Government issued documents to like cover the claim that okay, this land is currently in their possession and they have the assignments, right, from the owner to actually dispose it or sell it. You understand? They just do some sort of convincing videos and then do flyers here and there and then get people on board. You get. So these are like the risks associated to them. You understand? But if you are doing it with a credible platform, right, most of these risks will be ruled out. Thank you.
All right. Thank you very much. I'm tempted to ask another follow-up question because y- I want to know now, for Musha, what systems and structures do you now have in place to ensure that if I'm investing on your platform, I'm not the chances that I'll be scammed are like zero to none. So what systems have been put in place for that?
Okay.
So,
So for Musha, no, let me take it. So yeah, in Musha, right, there are a couple of things we disabled. You understand? Now, it needs to one, the customers need to be aware that Musha is not the owner of these properties we have been that is being sold, right? So Musha is just a middleman, right? We have our partners, right, who list their properties in our platform. Now, Musha has a very, will I say, a very strict verification processes for these our partners. You understand? And it goes to the point of we physically going to their offices, confirming these documents, right? Then our legal team processes. There's a document called irrevocable power of attorney, right? So that sort of gives Musha the right to sell the land from the owner. You understand? So we have a very strict process of verification. You understand? And then we also verify that the property actually exists, right? And then the property is actually owned by the right owner. So once you've passed that first stage, right, I think it checks out some of the financial risk, right? At least you won't have an issue with fraud. You understand? And then every payment you make on Musha, right? You make the payment to Musha, right? So we hold the funds of the seller, right, until we confirm that the proper documentation and everything has been done before this fund is released back to the partner. You understand? So we have, I wouldn't start mentioning all the checks we have at different points in order not to make the call boring, right? So, but we have checks at different points, you understand, to ensure that our customers' funds are safe and their security is guaranteed. Thank you.
Okay, thank you so much. Thank you so much, sir. Thank you so much for clarifying that. I want to confirm if Mr. Chuka also has some things to say. Has he covered everything you wanted to say, or is there anything you want to add?
yeah, I think he covered pretty much everything. And I think the only thing I might want to add is that, we have kind of like um, MOUs with these companies and also to ensure that these properties are there and they are safe, and we are looking after them. So that's just a bit I wanted to add. Thanks.
Okay, sorry, you mentioned something just now, MOUs. Sorry, pardon me, would you like to, what does that mean? What are MOUs?
Memoranda of understanding, so that it's kind of like a document you have signed with the owners of these properties to ensure that this partnership is, airtight, and we use that to also confirm that these properties will be available until they are, resold by Musha. That's after it must have been sold on the Musha platform, right? So it just gives us that level of understanding across different parties of the
Oh, okay.
partnership we are doing and how we are going to deal with it over time.
Okay. And this MOU is tenable in the court of law if it is breached, right? Is it legally backed? I'm just trying to give our listeners a very good sense of safety and assurance. Is it legally backed?
So for MOUs, it depends on, like Noso said, MOUs are just kind of, they are legal documents, quite all right, but you can't really use it to sue a company, right? So that
Okay.
is why we also have kind of like the powers to sell, right? That is the
Okay.
one that
Okay.
if it is breached, then you can actually take legal actions, So, but we just
Oh,
have
okay.
all these documents, in place just to have those second line of assurance and the rest of it.
Okay, thank you so much. I just learned something new. MOUs. So nobody should be careful if you're entering into an agreement and an MOU is all that is being tendered, then you know that if push comes to shove, you're on your own. But with Musha, we have more than that to ensure and assure your protection in your investment options. All right. I think I just have one last question, and and that will be it. Since we're talking about first steps, this one goes to anyone. Would you like to just highlight certain things that you feel I myself or we as beginner investors to prepare in terms of maybe documentation? It may not even be restricted to documentation, it may not be restricted to capital, just things. What are the things you will highlight as the steps of preparation if I'm about to start investing with Mosha? What are the things that I should know? What are the things that I should prepare towards my decision to click buy on the Mosha platform?
Sorry, can you take the last part of that question again, please?
Yeah, I said what are the things I should be aware of ahead of my decision to click buy on the Musha platform. That is ahead of my decision to invest, to outrightly invest. What are the things I should know about? What are the things I should prepare in my mind or however?
Okay, so the major thing every investor should have in mind when it comes to real estate, and this is not just about fractional investments, it also applies to any investment you're making in real estate, is that it takes a bit of time to appreciate, right? You could invest in a property and you might not really get, maybe, well, depending on the amount of returns you're looking at, you could have an investment that maybe can yield up to 300% in maybe 6 months or 1 year, because I've seen it happen, even shorter. And you can
Mm,
have investments that might take up to 5 years to get 100% investment returns. Sorry. So it just depends on so many things. But you have to be willing to ride the wave, right? One thing about real
yeah.
estate is that once you invest, it's not like crypto that goes up and comes down. Once the property starts to appreciate, it doesn't come down. It never comes down. It always maintains that upward trajectory, right? In some cases, in maybe some sort of property categories, like say buildings or something like that, you could see that in, say for example, depending on where you're staying in Nigeria, if for example in the city where I operated from, Enugu, you could see very old bungalows that already dilapidated, that were built in like the 80s and 90s. And now if you learn about like the amount of money they are being sold for, and actually just opposite to amount that it was developed with, and the money that was used to purchase the land, you see the massive
Mm.
difference. And these are old bungalows that nobody, like, it's almost a death trap, and people are just buying up the land to like rebuild on build a new structure on the land. So you see that it always appreciates over time. It always appreciates over time. And to be honest with you, it would always continue to appreciate because Nigeria's real estate sector, but with the way our population is growing, we need about 20,000 housing units every year to, at least for the next foreseeable future, to quench the need of housing in Nigeria. And
Hi.
nobody is really talking about this. Nobody is making any noise about it. And these are not my figures. These are figures from um, Bureau of Statistics and the rest of it. So it's just something we need to look into. And there's a whole lot that can be done around this space. Thank you.
All right. Thank you so much. Thank you so much. 20,000 units. That's a whole lot. That's a whole lot every year, and not just at once. Every year. Hmm. It really is a very it's a booming sector that people are sleeping on. But I'm glad that we're having talks like this. Even me myself that I'm hosting, I didn't know that it was that bad. All right. We've come to the end of our panel discussion. I'd like to say a big thank you to Mr. Nonso and Mr. Chuka for giving us much needed insight, answering our questions impeccably, and shedding much light on the intricacies of fractional real estate investment. Thank you so much, sirs. Um, we're going to go further, and because the sub theme of this February's Expo is demystifying fractional real estate, right? And we can't talk about it too much. I mean, we can't talk about it enough, rather, on this call. So we're going to be sharing a very short video, and after that, we'll have our very own Gutsnil take us through certain things with respect to how very much applicable it is in winning with fractional real estate. So before that, let me just play our short video, and wow, I really hope that we enjoyed that. I really hope that we enjoyed that. That was really informative. Thank you so much for making that video available. Thank you for making that video available. I mean, thank you so much, Gottmil. I love the distinction between REITs and fractional real estate. I love the distinction between timeshares and fractional real estate. I mean, really, really just adds to the wealth of value that we've already gotten from the panel session where um, the Mr. Chuka and then Mr. Nonso were giving us certain misconceptions and helping us understand. I mean, it's just beautiful. It's just beautiful. All right. I know that God's new is ready for us, and we're ready for you, sir. Just take us through what you have for us. You have the floor.
All right. Hello everyone. My name is Neil, and I'm going to be taking you through this session of um of talking about the profitability of fractional real estate against traditional real estate. Now, I specifically asked to be taking this session because for me, any investment that is brought to the table is not just um profitable because everyone talks about it um or because it looks good on paper, but also because of peer review, right? Peer review and maths. The math is the mathing. Is it adding up? So those are the two things I'm going to focus on in this report. Um, what is the superiority and who owns the security? Is it traditional real estate or fractional real estate? A friend of mine who I approached about Musha, Annie, she's going to watch this video later on YouTube. See, I use her as an example. She said, I want to invest as a big woman. I want to come into real estate as a big woman. I want to come into Oga real estate where I own a couple of plots, a couple of acres, right? And until then, I don't think it's safe for me to invest. And I understand this because in Nigeria, cash flow is very important. You can be making up to ₦1 million a year, and I mean that's the average income for a lot of people. ₦1 million a year. A lot of people make more, of course. A lot of people make more. Some people make ₦1 million a month, right? And you want to invest in real estate. You want to come into real estate, and you want to buy real estate in the municipal, in the city. And the main problem is that because of this inflation economy, whenever you go for assets, right, you're going for assets that are increasing in price every month. Now, this would be bad for you, but if you think about it, it's actually good. It's good that the assets are increasing. Inflation has its benefits and it has its disadvantages. The benefits is that Nigeria is now an increasingly profitable economy to invest in, right? So let's go into how they measure up against each other. Is it better for me to just go and buy one thing or go and buy a series of things? Now, I'm buying one thing. Now, let's put an amount of money on the table. Let's say you have that 1 million naira. 1 million naira is a good starting point. With 1 million naira, you can buy assets. You can buy an asset in um, near, at least on the fringes of a city. 1 million naira, you can't really buy something in let's say a Boeing, right? You have to go into, like, let's say, more into the rurals, more into the outskirts to get something at that price, right? But with fractional real estate, you can actually have access to in-town properties, right? For example, the properties that are selling right now on the Musha platform, two in Delta State and one in Enugu State. Those properties are not on the fringe. They are in estates, right? And normally, to get, as in fact, if you check the Musha platform, you see how much those properties are per plot, and that none of them is at ₦1 million. I think the list goes for about 2.3. Beg your pardon. Now that means that if you had that 1 million, you still don't have enough money to access that. You have to go back to the fringes and go between Udi and Suka, go between Nike and Udi and Ninth Mile to get assets that are in that range, and it will still take you a while to find. And now the interesting thing is that when you find an asset that is at that price range, you're looking at a longer time for your appreciation. The reason why people want to buy assets where development is that those assets grow in appreciation with the development. So if you were to buy an asset that is in the outskirts, you are looking at a longer time for appreciation than if you bought in the city. Now, with fractional real estate, you don't have to worry about that because you're buying something that a piece of something in the city. Now, that means that your assets, your value of your money is going to appreciate with the speed of the development. Now, let's look at some reasons why this is: diversification and risk management. Fractional, I hope you can all see this. This is a document I prepared. If you can see it, please say something in the chat box.
Yeah, we can see
Yeah,
it.
I can see it. I can see it.
All right, all right. So I believe you can also even see the small in screen of the meeting. Okay, so we
Yeah.
have fractional investments allowing you to spread your capital across various assets. This means that that 1 million naira, you could have divided it into 100,000 and spread it across 10 assets. You can also divide it into 200,000 and spread it across 5 assets. The meaning of this is that if one asset were to grow at 6% per annum, meaning that it grew from 100,000 naira, right, to 106,000 naira in that whole year. It's not going to happen the same way with the other assets. One of your assets could grow at 100%, which means that 100,000 naira will turn to 200,000 naira. Now, if you had put all that 1 million into one asset, whatever appreciation rate that asset accrues is going to apply to that your entire money. But with fractional real estate, you have a myriad of appreciation rates applying to your entire money. So your money is going to grow at various rates. And so when you're calculating your rate of return or your ROI at the end of the year, you're calculating from multiple points. So you have to now culminate so there is no way that you will have less appreciation rates than someone who bought one asset with 1 million naira. That immediately puts fractional real estate at 1 point versus traditional. Okay, let's go to the next point, right? You have access to high value investments. I already said this. You can't use 1 million naira to buy assets in a high value area. The smallest houses in Lekki right now are doing 100 million, 300 million, 200 million. We already have houses at we used to have just a few, one or two houses at 1 billion naira on the island. Now there are
Yeah,
multiple,
yeah,
especially with the development that's happening on Banana Island and Ikoyi, right? So you have access to high value investment when you choose fractional real estate. And this doesn't just apply in Lagos, it applies all over the world. Now a lot of people feel like fractional real estate is something that Musha is bringing to you guys or bringing to the world, and we don't trust them, let's see how it goes first. The truth is that there are other countries ahead of Nigeria in every aspect of life. When it comes to we just have our train walking from Lagos to Kaduna, right? And I think in 2023 it was attacked, right? But it's back on track, everything is going fine, so you can go easier now from Lagos to Ibadan. And that train is not even an electric train. There are electric trains, there are turbo trains that have been going around the world. When they say around places in the world, that would make trains in Nigeria look like you guys are in 1950, right? And the same thing goes for I'm not saying that this is the same in every aspect, but there's a country that is ahead of us in every way. So the same way fractional investment is not a new thing in the world. So there are other countries it has worked in: India, Dubai, the UK, right? Okay, so let's move to the next thing: liquidity and flexibility. I said it that in the beginning of my presentation that cash flow is very important in Nigeria. It's very important that when you make whatever money you make, you're able to keep some for what we call in contingencies, what we call miscellaneous things that may come up. Because for example, you go to buy an egg crate in the market, and when you went and you bought it the first time it was at 5,500, and you go and you earn a month's worth of money, you come back, you want to buy it again, it's added 1,000 naira. Now the way it appreciated in assets is in value or in price. The way it appreciated in price, it did not the amount of egg inside did not increase, just the price. It happens to all the commodities, including land, including real estate. Assets are appreciating while we are on this meeting. While we're on this meeting, I'll give an example of one of the assets on the Musha platform that is 33,000 naira right now. As at last year, it was at 30. When I say last year, I mean as at November last year, before our first expo, it was at 30. So assets increase. Like the next time we come for this expo, the assets on the Musha platform will we have increased in value. So, like Mr. Chuka said, it's always good to be a first responder, right? But there are disadvantages to not being a first responder, which means that you're going to buy at a higher price much later, and that higher price should have translated to profit for any of us who invests now. Compounded growth. When you talk about real estate nowadays, we're always trying to see how can we, when you go to business, like I'm a business person, right? I make books and I sell ebooks. I also do a bit of streaming. Now, when I make content, the amount of value or time or energy or money I put into making that content, I expect that over time, the small returns will compound. So I'm looking at something I made last year. I'm looking at gaining the ROI sometime in 2028, not even this year. right? So the same thing with real estate. When we buy assets, we don't expect that, okay, we are going to sell it in 2 months, 3 months. We're expecting like, okay, I'll keep this asset. Whenever you hear real estate testimonies, the person always has bought it in 1980 something or 1990 something or early 2000, and then is now selling it now at a higher price. You don't expect, so it's a long-term game, right? The same thing applies to fractional real estate, but with more compounded interest, with a higher volume of interest. When you're talking about the short-term benefit, if there is a short-term increase in fractional real estate's value against traditional real estate, it is bound to be even more in the long term. In whatever you see as a short-term benefit is going to compound. Fractional real estate is not going to reduce in profitability over 5 years. No, in 5 years it will trump traditional real estate, not just by the amount of people who will have adopted it, but also by the sheer appreciation in the value of assets, right? Now, in talking about market trends, I'd like to take us to another part of my screen. I prepared a bit of a search here. So let's do this. So let's type fractional real estate market videos from YouTube talking about fractional real estate in March. There are many of them, right? You can see more videos. Number one reason fractional real estate investors fail: fractional real estate unlocking fast profits 14 hours ago, fractional real estate investing 52 weeks. This is not even from Musha, right? This is not even from Musha. This is from people all over the world. Kachi Paglia is Georgian. That is his Italian. So he's talking about it in this 19 minute 21 second video. Now we also have other Nigerians who are logging on very fast onto this opportunity. How fractional real estate investors investing works in Nigeria. 5th of December 2024. CLG Global understands to solve. Punch unveils real estate investment platform, a fractional real estate investment management company, Mayhem Management. So this is news about this concept. This to show you that. So the theme of this expo is demystifying fractional real estate. I hope that these search results have shown you that this is not really an outlandish topic. It's not something new. It's just new to us, right?
Yeah.
It's new to you if you're hearing this for the first time. It's new to you if you have not already logged on to this opportunity. Those of us on the Musha team are really enthusiastic about Musha. Musha is one of our biggest the Musha project is one of our biggest projects because we understand the impact this will have on wealth generation in Nigeria. So I'm going to go back to my my screen here. Okay. So let's do a little bit of math just to show you. The truth is that fractional real estate is going to give you more compound interest in terms of appreciation value than traditional real estate. So we are looking at, let's say, a 2% to 5% difference with fractional real estate being in the lead. So that means that if you had an 8% annual return in fractional real estate, you have a 6% annual return in traditional real estate. And you're buying one asset with the same money that you could have put into multiple assets in fractional real estate. And you're having more risk in traditional real estate than in fractional real estate. Now, another interesting thing I should point out before I conclude is that there's a lot of documentation that goes into owning property. My grandfather was a serial investor in fractional real estate. We own tons of property all over Enugu State and Anambra and Imo State. And when he died, a lot of his assets came into contention because of how he shared his property. The result of this is that there was a lot of infighting in the family and all that. However, it did not take away the sheer value of wealth that he left behind. A lot of us want to leave wealth for our children, and want to be great people in terms of what we own and how we acquire things. And I think that fractional investment, if my grandfather had access to it, it would have increased his wealth so much, right? And the same thing goes for even a, and when Mr. Nonso was talking, he talked about classes. Like you have different classes of people that are now having access to real estate because of fractional real estate. I don't
Yeah.
really even see people in classes except when I have to do some sort of stratification for outreach because I'm a marketing person. I don't really do classes of people when I talk, right? However, the beauty and the truth of the matter is that one of Mr. Also said is very correct. Fractional real estate deletes that idea of class, because now everybody can invest, everybody can
Yeah.
be an owner. You don't have to wait till your salary is at 2.35 million a month. You can start from, and I invest in crypto. I invest in cryptocurrency. I invest in stocks. I invest in shares, right? And one thing I can tell you is that your 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 broker your broker can mess with your rates on his dashboard. Your broker can even leave it and everything goes well, and then there's a sudden crash. We've seen crashes in this the Donald Trump ascension saga. We've seen crashes since Didi was arrested. We've seen crashes, we've seen tumult in the market, we've seen even Bitcoin experience tumult. But I have never seen, I have, even when there is a war, like war, when Ukraine is undergoing war right now, I bet you that land in Ukraine has not depreciated in value, right? So fractional real estate allows you that to tap into that peace of mind that comes with actual real investment. No one ever owned a piece of land and regretted it. Okay, I wish I hadn't bought this. No, the rich is always, I wish I had bought it on time. So that ends my presentation. I hope we all learned one or few things. I hope I was able to really add value to the expo today. My name is Daniel Chibukem Achkano, aka God's Nail. Thank you for having me.
Thank you so, so much, Godsnell, for that. Thank you so much for such an explicit presentation. I just believe that that's about sums up and caps everything up with what we've been trying to say, what we've been trying to get you to see, that fractional real estate is the next big thing. And it's amazing if you are an early adopter for something as large as this. I mean, you said something close to the end that really got my attention. You said war is happening in Ukraine and land has not depreciated yet. I don't think there's any other investment bank or investment channel that assures you of so much financial security as fractional real estate. So thank you so much, Gottnil, for that. Thank you so much for the time. We've come to the very end of our third expo. But before we go, I want to do something really special for us. I'm going to be taking us on a very brief walkthrough on the investment options that we have on our Musha platform currently. We've been talking about, fractional real estate. We've been delving deep into so much. But right now, I'd love to share my screen. Just let me know if you can see my screen. Just let me know if you can see my screen. Mm, All right. Okay. Uh, I'll need to type in my password real time. Now, ideally, I would have loved to show us, how to navigate the Musha platform and interact with it and just explore. But we've covered that extensively in our previous expos, and we also have our YouTube videos live that deal with this in depth. So I would like to counsel you. Our YouTube page link will be sent. Godwin, can you please help send the YouTube page link to the chat? And I think I can just go right in. So we currently have three investment options on our Musha marketplace. And it's beautiful because if you're looking for a secure, high value, strategically located real estate investments, these are really perfect for you. They're really, really perfect for you. Like we've mentioned, in fractional real estate, there are things you can do. You can land bank, you can resell, you can just chill for future appreciation and all of that. But if you're looking for high value investments, I mean, these options are perfect for you. We have Bethel City. Maybe I'll just start with Bethel City at Centenary City beside the golf course in Enugu. And this is a prime neighborhood. It's located in a high-end, rapidly developing area. Surrounded by prestigious estates like Capernaum Estate and Flourish City Villa. So you understand that in real estate, it's not just the value of its land itself, but the value of the environment that goes into its appreciation. We also have top-notch infrastructure for Bethel City estates. We have tarred roads, constant electricity, multiple access routes, and a secure environment. And coming with this investment option, you have title documents like the deed of assignment, the power of attorney, a registered survey plan. Beautiful. These are pictures, snapshots of the area. I would like to say that currently, I'm using the word currently intentionally. Currently, Beta City runs for 50,000 naira per unit. Now, I want to mention that there are about 340 units available, and all 340 units come together to make one plot of land. And so it's if you buy one unit, that's if you pay 50,000 naira now, you own one out of the 340 units, and you're not limited to owning just one unit. If you decide to buy all the 340 units, I mean, it's not a bad idea, right? But I said currently because Gottlieb mentioned something that one of our assets that is currently 33,000 was about 30,000 in November, right? And for now, that might not look like such an astronomical growth curve. But I kid you not, we might be talking about something entirely different in the second quarter of the year. So don't sleep on it. 50,000 naira. I'll just give you a few reasons why you should invest in Better City. You know, Sentinel City is one of Enugu's most prestigious developments. I mean, one of its high value developments, attracting residential and commercial projects. The government is actively developing that area. And so we are looking at long term appreciation. We're also looking at, since Centenary City itself already attracts so much investment and development, it's a prime asset for long term capital growth. So you're literally investing into something that already does the work for itself. And this project is being developed by Bomac Group. You can check them, Broma Group of Companies. They are a well-versed development company that has multiple projects across Nigeria. You might want to check them out online. All right. Like I said, 50,000 naira for a unit and 340 units make a plot of land. Okay, next I'd like to talk about Crown Vista, and I'm particularly interested in Crown Vista because of its location. It's just a 5 minutes drive from the airport. from the airport at Port Harcourt International Airport. I mean, just 5 minutes from Port Harcourt International Airport, developed by Rockville, Homes, and strategic location for this development makes it high value. I mean, it makes it ideal for frequent travelers, expatriates, corporate professionals. You can imagine the kind of the people. God just said He does not see people in class, but the truth is that society sees people in class, and there are a class of people that such a strategic location attracts. And this means that land banking is very profitable here, and you expect high ROIs. Of course, because of its proximity to the airport, you also be expecting that the facilities and the infrastructure around there is also up to par for residential development. Now, for this investment, the title documents that it comes with are the deed of conveyance and a verified survey plan. Now, Crown Vista City goes for 23,000 naira per unit, and a total of 100 units make up a plot. And as of today, there are only about 98 or 99 units available, right? Um, I'd like to say some more things. Port Harcourt's next big expansion zone, that is the IPO Industrial Park, is also very, very, very close to this. And so it's a major economic hub. And so you can expect huge investments opportunities around this. Um, the government is also working on a smart port city in Eleme, or is it Eleme now? Please, Port Harcourt people, I'm sorry. I'm really sorry if I'm befitting your pronunciations. Eleme or Eleme, expected to boost real estate demand across the region. Experts predict an 8 to 15% annual appreciation due to infrastructure projects, making it a smart investment choice. So don't sleep on Crown Vista City. Don't sleep on Crown Vista City. And then finally, we have um, Green Ivy, Green Ivy residence in Rivers, Port Harcourt, also near the Port Harcourt International Airport. I mean, everything I've said applies, but this goes for 33,000 naira. Now, this is the property, or this is the development that Gosling was referring to. Currently goes at 33,000 naira, and 100 units makes a plot, right? This area is perfect for residential and commercial development due to its proximity to the IPO park. Of course, and generally, real estate in Port Harcourt is fertile in the sense that Port Harcourt remains one of Nigeria's fastest growing cities. I mean, when you're talking about the big cities in Nigeria, you're mentioning Port Harcourt along the leagues of Lagos, Abuja, and what have you. So you can expect high property valuation appreciation. So that's it. If you're on here or you're watching this video later on YouTube and you're looking for smart investment choices, you're looking for high value investment choices, you're looking for high potential investment choices, then our options here are perfect for you. And of course, we'll be onboarding so many more developers and so many more properties as time goes on. But for now, these are our prime premium assets that can be your prime premium assets if you make a decision today. All right. Um, Thank you for lending me your ears. I hope that the things I've said, and I think I want to implore you to do your personal research, look into BOMAC groups and look into Rockville. For them to be partnering with Musha, then you know that they are solid people, right? Like Mr. Chuka said, and Mr. Nonso said, our verification systems are very, very strict and thorough. So these are trusted developers, and I'd love for you to just, on your own free time, go check them out and see how you can be a part of what Musha is offering you. This is my personal page. Don't worry. I don't want to show the things that I have. I don't want to cast it so that people will not enter my DM and say, sa, 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 sa. I'm a rich man, but I'm not loud. All right. Hmm. Okay. So we are about rounding up, and I'd like to call on Mr. Chuka to give us a final word. If there's anything you'd love to say to us as we round off, we'd love to hear from you, sir. And this has been Daniel Oduatishe Oshinaki, your host. I've been hosting since the first edition, and I hope that I keep getting better at it. I've enjoyed myself so far, and I hope that you have too. If you're watching this video later on YouTube, don't forget to subscribe, like, and leave a comment. Let us know what you learned. Let us know how this expo has helped you to make a decision. I've been Daniel Oshinake, and it has been a privilege. So, Mr. Chuka, if you're ready, we can have you, sir.
All right. Thank you very much, Daniel, for the explanations you've given around assets. But I think before we go, I think I'd like to say one last thing. Just we've said a lot about fractional investments today, and I believe that it's just up to each and every one of us to make a decision of what we want to do with our money, right? So it's very good that you've acknowledged this and have prompted people to go and do their own personal research before investment. Like that would always be done on crypto, any crypto investments. You know, you have there. There's even an acronym for that. Um, do your do your own research, right? So um, I would urge everyone to look into this and prep for the future because we are moving and time waits for nobody. I think that would be all from me. Would be handing back over to Daniel for any final um, bits of it. Thank you.
All right. Um. So we have two levels of the referral program. The first level is for referring individuals, users. Um. Already we know that when you are a user of Musha, you have positioned yourself for transgenerational wealth. But there comes an added benefit of referring um, one person. For every one person that you refer, you have a 1,000 naira, um, 1,000 naira added to your either your bank account if you want it there, or your Musha account. But we haven't. I don't think we have put in that feature right now. So the money will be sent to you, accrued and sent to you. Um, the idea is to encourage everyone and thank you, especially for Musha, for spreading the word and helping out people, right? Um, with every one person you bring in, you have 1,000 naira that is sent to you. Um, this translates to as everyone anyone you bring, you have as equal 1,000 nairas, right? Now this is not to say that each person is worth 1,000 naira to us, right? And that's why we also have our giveaways from time to time and our draws during the expos. And then the the one I really love is when you introduce the Musha platform to um, real estate organizations or partners. When you onboard partners, so the process is that when a partner comes on board, they onboard one of their properties, a plot of it, or a section of it. And what happens is that we make these properties available on the platform, and you can just come and buy a fraction of it now. And whenever this happens, whoever it is, which is a benefit that Mr. Chuka is enjoying solely now, being the most active, we should even give him award, most active of our directors. you whenever you bring in a company, a partner, you get a percentage of every asset that is sold for in that via that company. So let's say, for example, right now we have Rockville Homes is one of our partners. We have the Boomer Group, also one of our partners. Mr. Chuka is enjoying a dividend on every property that is brought on to that by those companies. And as soon as the companies sell off units on one property, they onboard another property because they don't run out of. Nigeria is one of Africa's largest countries. We don't have a shortage of real estate to sell and to trade in. So that is basically how it works for the referral program. Please fill our registration form for the expo, or and open a free account on musha app.com, and we will add you to our group where we answer questions. When anyone that has questions, we answer your questions immediately. On You can speak to any of our representatives on the platform, on the chat group, right? So it's not, you don't pay for any of these things, it's free. You can just all you have to do is fill the forms and get across to us if you have any more questions. But basically, I think it's a profitable program to not just to earn, but also to help people, right? Help people. We can't thank you enough, but we found a way to just give you a token of our appreciation. One caveat I should add to adding people is that you get paid when the person buys an asset. So you can get a user on Musha, and then you don't worry about when the person gets an asset, but when the person eventually gets that any asset, you get paid immediately. So you can be somewhere else just minding your business doing something else, and then someone you introduce to Musha gets an asset, and then you get you know rewarded. So that's it for me and the referral program. Thank you very much.
Okay, thank you so much, Shuka. I'm sorry, Gutsnil. Thank you so much, Gutsnil. So there are two levels of the referral program. That's when you invite, investors, people who invest on the platform, or you invite partners and developers. Right. Thank you so much for that.